Let's spend a few minutes talking about what a reverse mortgage is and what it's not. A reverse mortgage is a mortgage loan, plain and simple, very similar to a conventional mortgage, with the exception, the ability or the requirement, to make payments is optional. If you don't make payments, then the interest and the mortgage insurance accumulates to the balance of your loan, so that balance will grow over time. That's allowed, that's the design of the program, that's exactly how it should be used. Losing your home, I hear that a lot. Oh, I've signed my home over to the bank. Not true at all. You have the same deed of trust that you sign, that the bank has a interest in your home, but it's limited to paying the loan back. And what's a little bit unique on the lender side is they're further protected, as you are, that you will never owe more than the future value of your home. That's important because the lender's assured they're going to get their money back. The FHA insurance fund covers them there as well. And you're protected that if we have another 2010 mortgage crisis or whatever and values of homes drop and all that sort of stuff, or that you keep the reverse mortgage long enough that the balance grows greater than the value of the home, the future value of your home, that you're protected too, and you or your estate would not be responsible for any shortfall. So it's, again, designed that way. All the time I hear, I'm not in a desperate situation, I'll wait. That's really not a good answer at all. 95% of my clients are not in a desperate situation. The reverse mortgage is used as a planning tool, and therefore it's in reserve for either pays off a mortgage or whatever, but it can also be in reserve to simply handle, be there so that you don't have to have cash in your portfolio. You can use a reverse mortgage for that cushion, or it's there for emergencies. It's there for peace of mind. Simply having that reverse mortgage credit line in place, maybe you paid off a mortgage and the remainder's in a credit line. Simply having that is a comfort and security. If you were to listen to the celebrity spokespersons on the television, you would think a reverse mortgage is free and it's easy money and all that sort of stuff. And we've all been around long enough to know that's not the case. A reverse mortgage incurs interest. It's market rate interest. It also incurs a 0.5% annual mortgage insurance on the outstanding balance. There's also, when you originate a reverse mortgage up front, there's a 2% charge for the that contributes to the mortgage insurance fund. Now, again, we talked earlier that mortgage insurance fund is very important to you because it assures that you'll never owe more than the future value of your home, whether your balance grows or the value of your home falls. So it's important protection for you as well as the lender. Many people say my equity in my home is a safety net and I don't want to access it. Well, if you're not going to planfully access the equity in your home, then you're in a situation where your circumstances change. You might very well have to sell your home or do something more, quickly and with less plan. And a reverse mortgage can be in place to handle those bumps and to help you in either in reserve or monthly or something like that in a planful way. So it's there. It's a big peace of mind for a lot of people. The upfront costs to get a reverse mortgage, I hear it's too expensive. It's actually very, very similar to a normal FHA loan. There's the title and escrow costs the same. The origination is quite often less, actually, is the way it works. But there is the upfront mortgage insurance, which trips everybody up. That's a 2% charge across the board for any reverse mortgage. It's on the principal balance, the eligible balance. And that goes into the FHA insurance fund, as we've mentioned a couple times, that helps you in the security of your loan and knowing that you'll never have to owe more than the future value of your home. I'm always asked, how much money can I get? When the calculation for how much based, value your home, and then there's a percentage applied to that. That percentage is calculated based on age and interest rate. And that gives you the amount that's available. That's reduced by a reserve set aside for the future interest and mortgage insurance that will accumulate on your loan until it's paid off. So there's the gross amount you get, then there's the reserve set aside that are reserves taken out of that, and then this is the amount you get, or that's available to you. Now it could be available to you in a credit line, it could be available in a gross amount, or available in a monthly tenure or monthly payment. What can be repaid with a reverse mortgage? What obligations can be covered? The allowance is for mandatory obligations. So if you have a mortgage, then that can be a mandatory obligation and paid off with a reverse mortgage. Or it's limited to 60% in the first draw, so to speak. The remainder is available to you after 12 months. That's done to kind of put the brakes on the process, and so we don't have borrowers taking out the full amount they can with no real obligation to repay. Termination events, when the loan has to be repaid. Basically, when there's no longer one of the borrowers living in the home, at least one of the borrowers living in the home, then that's a termination event, and the loan needs to be repaid. Now, it can be repaid in a number of different ways. Sometimes passing the home along to the heirs and they would like the home, they can refinance it. The home can be sold. Funds from other sources can be used to pay off the reverse mortgage, and then it's done. It's still your house, your estate, belongs to your estate, no problem. The timing is when you no longer live in the home, you have about 12 months to resolve the reverse mortgage, 6 months formally, and then requesting an extension as needed. Because you don't want to be forced to sell a house in December because the time happens to be up. So you can ask for extension as long as you're actively communicating with the lender and are progressing to getting the reverse mortgage repaid. I hope you found these short excerpts helpful. They certainly cannot replace a detailed discussion because, again, a reverse mortgage is part of a financial plan, and it's got to be unique to your specific situation. So please give us a call. Be happy to help. By background, I'm a CPA. I communicate well in the financial world, and so really can understand how to incorporate a reverse mortgage in the best way into your financial plan.